Okay, my name is Bobby Vaught. A couple of different parts of this channel. Don't forget to hit the subscribe button if you so choose. One part of this channel I talk about political things and issues and whatever is going on in the day. That's not today. We're going to talk about investing again. If you're so interested, there's a series that I've done. Everything you need to know to understand investing. I'm up to 17 lessons now. I'll put the link to lesson 1 in the description below. And then each lesson has a link in the description to the next one, so they're all easy to find. You just go all through them. This presentation today is about investing, but I'm not going to make it lesson 18. Okay, there's a reason for that, because those lessons are more, I tried to keep them more generalized in terms of what to look for in the stock market. Okay, very heavy emphasis on the stock market, also covered bonds and pretty much currency trading, pretty much everything. So if you're interested, there's that 17 lesson, but this is not lesson 18 for reasons just explained. This is more, I'm just going to get into some specific here on something. In fact, the specific that we're going to talk about today is SCHD, the Schwab US Dividend Equity ETF, called SCHD, why I'm in it and why I stay in it. I do both things. I pick my own stocks. I do a lot of that, and I also have ETFs, and SCHD is one of them. I'm going to explain today why I'm in it and stay in it. Okay, just my opinion, doesn't have to be yours. Okay, first thing, real important to understand: SCHD is not something that you're likely going to put $5,000 into it, and in 5 years it's worth $100,000. That's not going to happen. Even if you have it on auto drip, reinvesting dividends, good luck. That's not going to happen. Okay, if you're looking for something that's going to you put $5,000 into it, it turns into $100,000 in 5 years. That's going to require more risk. It's something very important to understand about investing. And I talked at length about this in those lessons. And I've said this for years. Show me someone whose exclusive measuring stick as to how well they're investing is their total return, and I'll show you someone who does not understand investing. Let me explain what I mean by that. Everybody knows a Joe. It might be your brother-in-law or whomever. Okay, everybody knows a Joe. It's that one guy that you talk to. It's usually a man who does this. That one guy who loves to tell you how much better his portfolio is doing than yours. Is he telling you the truth all the time? Maybe. But even if he is telling you the truth, risk and reward are two sides of the same coin. You take one with the other. Okay? And if that, I mean, you just do. If that weren't true, everybody would just be investing in the most speculative things they could find. There wouldn't even be any reason to consider risk. Everything has different risk reward. Okay, you can go all through the spectrum on the risk reward scale. Okay, more risk, the more reward, the higher the risk. So if you want to put your money into something that's, take $5,000, turn it into $100,000 in 5 years, well, that's going to require more risk than SCHD. So somebody says, okay, well, you're saying I may just lose the risk. You're saying I may just lose the investment entirely then. Yeah, that's right. That's the reason they call it risk. Okay? I was listening to another guy on YouTube that sounded pretty good. His name is Rob. I just discovered him just earlier today. And good guy. And he explained it this way. You're looking for, the reason you bought SCHD, shares in SCHD, if you did, the Schwab US Dividend Equity ETF, the reason you bought it was because it's reliable. You have diversification. It's an ETF, okay, and as he put it, you sleep well at night. Yeah, that's right. You get a real good idea. It's going to make you some money over time. I saw that it kind of took a spike up today in the price, but you have A reasonable expectation, a good expectation, is going to make you some money over time and you sleep well at night. That's why you bought it. Okay? So, SCHD, if you bought it, that's why you have it. SCHD, so you have diversification, you have a good yield. I call it a dividend growth ETF, even though they don't really specialize in growth stocks, but I call it a dividend growth ETF because they do have companies that grow the dividend. In fact, we're going to demonstrate that here in just a second. And it has a low expense ratio. Why does it have that low expense ratio? 0.06%, less than 0.1% expense ratio. The reason Schwab is able to do that with the SCHD is because it's not like somebody is sitting there working at Schwab, a stock picker, going, okay, well, now we don't want that one, we do want this one because of this, this, and this, and this. It's not like watching the financial news, okay? They have criteria. They have criteria that a company has to meet in order to be in the SCHD. And it's not really, they wrote the criteria, and then the criteria determine what's in the SCHD. And when a company no longer meets that criteria, they typically rebalance every March, once a year. When a company no longer meets that criteria, then that one's out, and a company that does meet that criteria comes in. And there may be several changes every March. All right? And so look at what the criteria actually is to be in the SCHD. Here it is. Dividend history. Minimum 10 consecutive years of dividend payments. Market cap. That's good. Market cap, at least $500 million. Liquidity meets minimum liquidity requirements. We're going to elaborate on that in a second. Exclusions. Excludes REITs. Good. I have not seen a REIT that I like, including Realty Income, ticker symbol O. Is very popular. People talk about it all over YouTube, all over the internet, and various places. I don't like it. If you want to know why, I'm not going to get redundant here. I don't want to repeat everything that I said in an earlier video, but I just made a video. In fact, if you're interested in understanding why I don't like Realty Income, ticker symbol O, I'll put a link to that video. I think it's roughly about 15 minutes, give or take, and I'll put a link to that in the description below, okay? So if you want to know why, refer to that. Excludes REITs. I haven't seen any REIT that I like, in fact. Master limited partnerships, convertibles, and preferred stocks. So SCHD limits, amongst other things, REITs, preferred stocks. Preferred stocks, as you know, are kind of they're kind of an in-between thing. They're kind of a stock, and to me, they're sort of it's sort of a stock that acts like a bond. They tend to pay higher yield than if you just bought the common stock, but they don't increase it typically. Let's see what else we got here. Criteria. After initial screening, stocks are ranked using these 4 financial health indicators: cash flow to total debt ratio, measures a company's ability to cover its debt with cash flow. My understanding of that, they didn't elaborate here on this overview, but my understanding of that is that the company has to have cash flow sufficient that if they wanted to, they could pay off all debt in 5 years with that cash flow. Doesn't mean that they're going to do it, or even that it's a necessary, or even that it's a good idea necessarily. Debt raises capital. They do that for a reason. But it just means that they could do it if they wanted to. Return on equity, ROE, shows how much profit a company generates from shareholders' equity. 5-year dividend growth rate indicates consistent dividend increases. Dividend yield, the annual dividend per share relative to its stock price. Weighting caps. Limits is about the diversification. Limits individual stocks to 4% and sectors to 25% for diversification. it's rebalanced every March. Okay, so if you look at it right now, the top holdings, the 25 top holdings right now, it's 102 holdings. So you have diversification. The top 25 are Lockheed Martin, Bristol Myers Squibb, Merck, ConocoPhillips, Texas Instruments, Chevron, Verizon, Home Depot, AbbVie, Cisco, Coca-Cola, ticker symbol KO, need to scroll a little bit here, Amgen, MO, Altria Group, PepsiCo, UPS, United Parcel Service, I don't know what that one is, EOG Resources, Valero Energy, Ford Motor, there's the one in between UPS and EOG Resources, SLB it's called. I don't know what SLB is. Ford Motor Company, Fastenal Company, Target Corporation, One Oak, Paychex, Fifth Third Bank Corp, Kimberly-Clark. Those are the top 25. Some of these, in fact, the top 6 of them right now are marginally over 4% of the portfolio. Like I said, they rebalance every March. The portfolio is reviewed and updated annually, typically in March, to maintain quality holdings. Quality holdings according to what? Their criteria. Okay? There's nothing wrong with SCHD. There's 2 Marches ago, this is January 8th, 2026, so last March would have been 2025. 2 Marches ago, March of 2024, SCHD dumped Broadcom, ticker symbol AVGO. I've looked at Broadcom many times. In fact, recently, I didn't like it. I consider myself more of a growth investor, but value is at least something that I look at when I'm looking at individual stocks. And the PE was like it's 72 or some such thing like that. It just didn't meet my criteria either. Does that mean it couldn't keep going higher? No, it just didn't fit what I look for. Okay, but in any event, here's what I'm getting at. So 2 Marches ago, March of 2024, SCHD dumped Broadcom. It no longer met their criteria. And a few people kind of got upset about it. So, hey, that's a perfectly good company, and you dumped it. Here's something to understand. SCHD, Schwab would have been wrong not to dump Broadcom out of the SCHD. It didn't meet the criteria anymore because people bought SCHD for a specific reason. To meet those criteria and to have that diversification and that low expense ratio. Because of that, because their criteria manages the ETF, what's in it and what isn't. If you wanted, it wasn't their place to start trying to figure out, hire some multi-million-dollar paid fund manager to go, yeah, I still like Broadcom, leave it in. It would have been morally wrong for them to leave Broadcom in if it doesn't no longer met the criteria for reasons just explained. People bought SCHD. You bought SCHD if you did for those reasons. For the low expense ratio, because of the criteria, the low expense ratio, the criteria manages the portfolio. That's why the fund, that's why they can have a low expense ratio, and because of the diversification. Okay? Why do I stay in the SHD? It's reliable. I also pick my own stocks. I also have ETFs like SCHD. It's reliable. They just increase the dividend, and I expect them to keep increasing the dividend because they have dividend growers in the fund. That's how they do that. All right. They don't buy it because you think you're going to, turn $5,000 into $100,000 in 5 years. But even if you drip it, that's not going to happen. You buy it because you can be very comfortable that you're going to make some money over an extended period of time. It's reliable. You sleep well at night. You got diversification. You have that criteria, and because of that criteria managing the fund, you have a low expense ratio. All right? Yeah. There's nothing wrong with SCHD. It kind of fell out of favor for a while, kind of may come back a little bit. The price took a pretty good spike today, I understand. In fact, let me look at the price. I was kind of surprised about that, actually. This is not typical at all of when you own SCHD, but the price took a 1.86% jump today, January 8th, 2026. Yeah, don't expect that every day from SCHD. That's not going to happen. But anyway, I hope that helped a little bit. I just wanted to give you my perspective on things, why I have shares in SCHD. It's not the only ETF that I have, but I do have shares of SCHD and the reasons why I stay in it. Okay? All right, so with that, I'm going to leave it at that. Don't forget to hit the subscribe button if you so choose. If you're interested, there's that series that I did, 17 lessons, everything you need to know to understand investing. I'll put that link, the link to the first lesson at least, in the description below. Every lesson has every lesson has a link to the next one, so they're all real easy to find. Okay, I'm going to leave it at that. With all that being said, hope life is treating you well. You have a great day.